For-profit housing. Zillow fails to show the lunacy of for-profit housing. Oh, this is a little older, but let's do this.
In a system where housing is considered an investment or a commodity, the human need for shelter will always take a back seat to the interests of the investor class. Now, recently, for a brief moment, the failure of Zillow as a major investor in single family residential homes yielded pretty satisfying headlines for people like me. But it also highlighted a pretty serious issue of treating housing as a business venture as opposed to something that's necessary as a basic human need. So, what happened with Zillow? The real estate listings website tried its hand in this mass scale
Zillow
home
had to lay off a ton of people recently. Didn't they fire a quarter of their staff? Housing is a human right. Say it with me, chat. Housing is a human right. 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 Yay! All right, let's lead the charge. Off we go. Off we go. We're marching. We're marching. We're saying that housing is a human right. Everyone go. Let's go. Can we get a puggies? Let's get to the streets and say that housing is a human right. Somebody grab the snacks and the cute animals. That, of course, is my joke that if I ever did try to lead the charge. Come on, chat! Boogies! Let's go! Can we get some feel good man in the chat? Malgers, yeah, it was a Malgers. Any Malgers in the chat? Any Malgers in the chat?
But it turns out that real estate speculation is just a little more complicated than the company had anticipated. So in August, there was an arms race among tech companies that were trying to buy up as much real estate as possible as housing prices exploded across the country. Zillow bet big, telling investors that it planned to buy thousands of houses throughout 2021 and turn its homes division into a billion-dollar business. So collecting personal data every time you go onto its website to look at real estate listings wasn't enough for them. They wanted to find another way to maximize profits. And so they decided to do this like mass scale.
But the whole thing is that it didn't even make sense for them to decide the time period to start buying 5,000 single family houses on the market. If anyone went about this correctly, it was the fucking BlackRocks. It was the asset portfolio managers on Wall Street that do have REITs set aside to purchase these homes and move them to their other subsidiaries. And BlackRock isn't the best example, but it's the Blackstones that are institutional investors doubling as corporate landlords who have their own portfolio of single-family homes. That's American Homes for Rents, that's Invitation Homes, right? A lot of these are now publicly owned corporations, but still, they were the ones who went in and bought in with cash those homes that were on the market at the very beginning of the pandemic. Why? Because the Federal Reserve dropped down interest rates almost to zero. So, having excess capital available to just purchase homes in bulk with cash allowed them to get in there before the market was so hot that the cost of the homes on the mortgage side started to rise. And that's why the value of the home is now up to, the median value of homes are up to $400,000 a pop because of the initial investments made by some of those, I guess, more strategic players on Wall Street that began to reap the benefits of adjusting and manipulating the overall cost to enter the mortgage market by raising the overall value of homes. That also increased the market share of their investors' profits, who are contributing to those REITs that are used to purchase those homes, then collateralized, that are then collateralized and used to expand their business even more. Or those higher yields, from investments maintain that rapport between huge investors and the entities holding the rights or the properties in place. That is the one thing that institutional investors did do. I don't want to say right, because this is not right at all. But obviously that means that their rents can rise, especially because all of those single-family homes are on the rental market. So by increasing the seeing the appreciation of those homes means that all of those investments that were made not only allow the corporations who own those homes, who have to pay down their debts on the homes and then pay out their profits to their investors, they get to raise rents, which is how they spread their market share or pay back their money that is expected to their investors, through the not the collateralized bonds, but the bonds on mortgage-backed securities. I'm getting into it. Sorry. And so that's the reason why, in some cases, rents are rising up to like 25 to 30% in corporately held units. Because, well, they purchased some of those homes, they converted them into rentals, then they waited for overall values to rise. They got the appreciation of their home, they saw how much it was worth, and then they had that legal way forward to say, well, look how much value there is on this home now versus when we bought the home 6 months from now, which might be the time period in which they do their renovations, right? When they do their house flipping. So then by the time they're ready to rent back onto the market, well, the appreciation of the home has risen, and now they get a set rent relative to the appreciation of the home. It's real fucked up. But for Zillow to come in a year and a half into the pandemic, once those values of homes have risen exponentially to the point where the median asking price of new home sales is up to $400,000. And that is a significant climb to where we were this time last year. They weren't even postured to make a profit when they purchased all of those sales, unless they were anticipating that the mortgage market would remain hot, despite the fact that we are in no place better off now than we were in the beginning of the pandemic in many respects. A lot of people are still hurting. Some people might have seen a financial benefit in their wages, but for the most part, wages have remained stagnant. Now inflation is affecting us, and it's really inflation that is going to keep some prospects from entering the mortgage market, because it's just now more than ever risky. Point being is that I'm just kind of like thinking out loud, literally thinking out loud, trying to understand how Zillow thought that this was a good time to purchase 5,000 homes in bulk. That is what blows my fucking mind. Anyway, really none of my business. Didn't work out. Go figure. But still.
Home flipping, venture. At the time, by the way, home prices were continuing to move upward, and you would expect Zillow to make a handsome return on this investment. But it turns out things didn't go so well, and I love it. So as the summer came to an end, it seemed
the only way that they would have capitalized on an investment is if the same upward trajectory that we've experienced over the last 1.5 years would continue to be the trend. And we're already seeing the market cool down. And because there is not as much demand, right? Because transactions have really almost come down to a halt. We're going to see a little bit of stagflation in the overall value of homes, either currently on the market or entering the market as brand new homes, right?
Seemed like Zillow's offers business was also cooling down. In October, the company told investors that it would stop buying houses, citing construction, renovation, and housing labor shortages. Bloomberg, however, speculated it could also be motivated by excess inventory and reported that Zillow seemed to sell a good number.
So, what Zillow did, and this is what's different with Zillow compared to other institutional investors and the targeted houses that they were purchasing, they were looking for homes not in the best places, but in hot markets where people might be moving to based on population trends, not overall housing market trends that Zillow focused on. Zillow went to their own information services from their website, and they started to figure out where there was a demand for specific houses in a hotter market and how much they were willing to spend. And then from there, they thought this would be a good place to purchase and make a killing by outbidding other buyers in a hot market, because that was the speculation from which they made their decision to focus on not the cheapest homes, but the homes that were going to be most sought after. And then they paid well above market price. And obviously they overexerted themselves so much that the total cost of that transaction was too much for them to actually be able to afford. Seeing as though there was actually not so much competition in some of these markets. And that very much could be the result of the fact that in the first year and a half of this pandemic, other institutional investors who usually have a little bit more assurance with their transaction from, you know, all of the risks in their assets that allow them to leverage their risks a little bit more easily. For example, BlackRock can use some of their fossil fuel assets to cover any losses if they need to. That's just an example. I don't know if that has anything to do with the fact that their portfolio is limited to only housing and nothing else. I would assume so, because Zillow is pretty much just known for being a housing website where you can purchase homes. You can look at homes on the market. Zillow is more advertising for noobs. Sure. But what Zillow did, I think what Zillow failed to understand is that they were already purchasing homes that had been manipulated by other larger institutional investors from Wall Street, kind of jacking up the price to suit their own needs, or to kind of reap the benefits that would come thereafter by purchasing those homes in the very beginning and then allowing them to have the benefit of raising the rents that would be tied to their single family rental units once the appreciation of those homes set in. So Zillow missed the mark.
Remember, there's a limited inventory of homes for working class families, middle class families to buy.
Zillow is holding the bag because Zillow's holding the bag for sure. They might have some investors, right? But
when there's a
they might have some investors, okay? But Zillow actually expanded their business to the iBuy. And that's where Zillow fucked up. Zillow's iBuy subsidiary tanked their entire fucking company. And I'm pretty sure through that venture is how Zillow is holding the bag.
Lack of inventory and there's
Because it
demand
tanks.
already that drives the price of homes up to something that becomes incredibly unattainable. However, these Wall Street investors, these institutional investors, buying up thousands of homes, in some cases, hundreds of thousands of these homes, obviously puts ordinary Americans at even more of a disadvantage. So when you've seen the housing prices really explode, understand that one of the factors, leading to this has to do with these Wall Street or institutional investors.
Yeah.
Now, Zillow's gamble had already resulted in tremendous losses,
Don't
forcing the
give
company to
anything.
scramble for a way to offload its bad investments. During the most recent quarter, Zillow's home segment, which includes Zillow Offers, recorded nearly $422 million in losses before taxes. That's up from roughly $76 million in losses a year earlier. Now, Zillow is looking to offload around 7,000 of the homes it bought. Now, unfortunately, poor decisions by executives usually translates to consequences for everyone else. Here's Zillow's CEO, Rich Barton, who, by the way, is still employed, discussing what those consequences are.
The decision to wind down our Zillow Offers iBuying operation involves a layoff of about 25% of the workforce, and that is a heavy, heavy thing given all of the people involved and all of the work they've put in.
We made really bad decisions, and so as a result, 25% of our workforce will be laid off. But I'm the leader of the company that engaged in this massive fail, and I get to do cable news interviews, and I get to keep my job. Awesome. Now, imagine losing money on real estate in an economy where low interest rates set by the Federal Reserve led to an explosion in home values. Not many predicted Zillow's failure, but some were able to read the tea leaves, like Steve Eisman, who raised red flags back in August of 2019. This was before the pandemic era. This was before the pandemic era home buying spree by Wall Street investors. And I think that this was certainly foreshadowing, but people weren't paying attention.
The part of the business I find the most problematic is what they call their, I believe, iHome business, internet buying business, where they actually go out and buy homes and flip them. I actually think the company doesn't understand the risk, the real risks of this business, which are massive.
Okay, yeah, so that's exactly the whole point that I was trying to make. They did not understand that their time for buying all of those homes came a year and a half late. And yes, they are a publicly traded company. I don't know what their REITs look like. I don't know how many investors they have. I don't know their yields or anything. But that's what did not make sense, at all. It did not make sense to go in and purchase 5,000 homes. I'm assuming in various markets, they probably didn't just target those markets where they knew that there was a high demand based on their analytics from their website telling them how often people were searching for homes in a given market, at what price range they were willing to pay. And maybe they were planning to do what other institutional investors have done. They leveraged their portfolios by purchasing high-priced houses in some areas and then very low priced houses in other areas for flipping and then putting back onto the rental market perhaps. But even if that was their plan to have a diversified portfolio of homes set at various values, it still did not make sense, seeing as though because of all of the transactions that occurred by other institutional investors during the first year and a half of the pandemic, that in and of itself manipulated the mortgage market and increased the value of homes so much so that it was not even an opportune time to go in and purchase so many homes in bulk, seeing as though they were going to be paying a premium because of those market manipulations that were already taking effect. But then they did the same thing that other institutional investors did as well, and they purchased above market rate, I believe, with cash, which is why they tanked their entire fucking business.
There are thousands of mini markets all over the United States. They're all local. They're all extremely different. They all have incredibly different risks. For example, did you know that in Dallas, there's a problem that many homes have cracked foundations? These type of different problems exist all over the country. This is a capital-intensive business. I know only one thing for certain. Between now and 5 years from now, assuming the company has some level of success, there will be massive problems that they will uncover.
Now, while Eisman might have known about the foundation issues in many of the houses in Texas, apparently Zillow didn't do its due diligence and invested in those homes. And let me just say, repairing the foundation of a home costs a lot of money. It's not as easy as just buying a home and doing like minor renovations to just flip it later for a much higher price. And so, understandably, Zillow found itself in quite a pickle. But for those of you who might be celebrating the massive fail by Zillow here, and I know that I did for a very short period of time, just understand that the 7,000 homes that Zillow is looking to offload will not be back on the market for ordinary Americans to be able to make bids on. No. They're looking for institutional investors to offload these homes on. The company's trying to sell
They're not
the
going to
homes
buy them.
to
Institutional investors are not going to buy those homes. I do not believe that institutional investors right now are going to buy any homes. They're going to wait to see if the market cools off and then the cost of those homes start to go back down based on zero people having the ability, the purchasing power, the credit, or the available capital to put down on a down payment. That will cause a slight adjustment of the overall value of homes to go back down. And then maybe institutional investors would get back into their home buying business. But they're not going to be buying anything. They know that they've just manipulated the market and drove up the cost of homes. They're not going to be buying shit.
Institutional investors, read Wall Street-like firms, to the tune of $2.8 billion. Investors made up about 20%, that's 1/5, guys, 20% of the home buying market in 2020. And Zillow says that it and its competitors made up around 1% of the housing market in Q2 of 2021. 1/5 of the housing market, though, is a massive and influential chunk. And I really want to emphasize that. When you have these Wall Street investors buying up like a massive amount of homes, I mean, 1/5 of the homes or home sales were conducted by these Wall Street investors, again, it artificially ends up driving up the cost of the limited.
I'll tell you what an institutional investor is going to start doing. And I believe that they've already done this. Institutional investors will now start to focus on foreclosures, and they will bid on the foreclosures that will be available or auctioned off by banks, because it's going to be at a discount. And I've had to listen to plenty of real estate moguls and their dipshit fucking podcasts to know that this is going to happen, because they too have talked about how this is a good time to start to increase your presence in the home buyers market if you can. by expanding your portfolio and focusing on the foreclosed market, but know that you have some real competition with those institutional investors that are going to be able to outbid you 9 times out of 10. They sure like to go on TV and talk about it. Oh yeah.
Inventory of homes. And look, I'm in the camp of homes should be thought of as shelter, as a basic human need. There shouldn't be a profit motive behind it, right? But
Right.
You should also understand that owning a home was really the only vehicle left for working families to build wealth. A lot of families actually have relied on the home that they've invested in as their retirement, for instance. That's how broken our system is. And so that one vehicle to build wealth for working Americans has been taken away by these Wall Street investors with the help of the United States government, by the way. Now, rather than protecting communities after the 2008 economic collapse, Obama-era financial policies actually further put American families at a massive disadvantage, okay? And it's important to look at the failures of these policies so we can kind of recognize them as they're being proposed in the future, but also so we can actually diagnose what the real problem is in the way that we carry out financial policies in the past, right? So rather than protecting communities and making it easy for homeowners to restructure bad mortgages or repair their credit after succumbing to predatory loans, the government facilitated the transfer of wealth from people to private equity firms. And that is a huge problem that we're experiencing today. For instance, in 2016, 95% of the distressed mortgages on Fannie Mae and Freddie Mac's books were auctioned off to Wall Street investors without any meaningful stipulation.
What I'm talking about. So those distressed homes on Fannie Mae and Freddie Mac's books, those were the mortgages that were doled out through HUD's own program that was put into place by Bill Clinton, incentivizing lower income individuals to enter the home buyer's market through FHA loan issuance, federal housing authorities loan program that was serviced by Fannie Mae and Freddie Mac. They're the government-sponsored entities. So those government-backed mortgages that were doled out resulted in many people still foreclosing. And this is not new. This is what Katie Porter brought up to Ben Carson, asking why there was such a large percentage of FHA loans with REO status, real estate owned, which means they went into foreclosure. These were the homes that institutional investors targeted, in part, in the aftermath of 2008. And this is going to happen again if we continue to see people foreclose on their homes because they were economically devastated by COVID-19, job loss, or any other changes to our economy that led to their inability to pay their mortgage. Institutional investors, now that they went in and they manipulated the overall mortgage market and increased the value of the mortgage market, any additional purchases, I would assume, would be through this auctioning process, where they're going to target foreclosed homes.
And private equity firms had acquired more than 200,000 homes in desirable cities and middle-class suburban neighborhoods, creating a tantalizing new asset class, the single-family rental home. Now think about what the priority was here. The very Wall Street firms that engaged in the bad behavior that collapsed the economy were essentially awarded with these homes that were honestly pennies on the dollar. They were able to get those homes for pennies on the dollar. In the meantime, all those American families who were foreclosed on really didn't get much help from the Obama administration. They lost their homes. And remember, they were people who were victims of predatory practices by Wall Street firms, right? These predatory subprime loans. Now, Blackstone benefited from the Wall Street friendly policies the most. By early 2020, the New York Times reported that strategic acquisitions culminated in the Blackstone subsidiary Invitation Homes, making Invitation Homes the largest single-family rental company in America with 79,505 homes after Blackstone sold its shares in the end of 2019. Now, Wall Street's latest real estate grab has ballooned to roughly $60 billion, representing hundreds of thousands of properties. By now, a whopping 20% of residential property is being gobbled up by these institutional investors, and they're not looking to flip the houses either. What they're looking to do is corner the market on rentals and essentially become these corporate landlords who can jack up rental prices as much as they want. Now, since inflation continues to dominate headlines, it's worth noting how Invitation Homes CEO Dallas Tanner answers questions about the undeniable and untenable inflation in housing. Let's watch.
And you certainly continue to be an active acquirer of more properties, given the fact that there is such a tight supply of homes out there, and we do see those prices on the rise. Are you able to buy what you're seeking, and what does that look like?
Yeah, we feel really comfortable that we can grow our business by, at least $1 billion this year in terms of new acquisition growth. It is a tight environment, but remember, there's still 6 million transactions every year in the U.S., and about 98% of those go between mom and pops and individual investors that are trading back and forth. So there's still plenty of opportunity to be an acquirer and to continue to grow the business. But the supply side will, stay relatively tight. I mean, mortgage rates are still, near the floor. We're not expecting new deliveries to all of a sudden come flooding into the marketplace. So I would expect that home prices stay relatively stable, if not continue to grow in value for the homeowners in the country.
Yeah, I mean, it might be beneficial for people who already own the private property, who already own homes, for these prices to continue going up. That means that they're earning equity on these homes. But also, why don't we think about what this means for everyone else? And remember, we're not talking about some unnecessary object that people want to invest in. We're talking about something that is a basic human right. So what does this mean for people who don't own homes?
Goldman Sachs out with a new note this week, forecasting home prices surging another 16% in 2022 due to mismatched supply and demand.
It's not just the worry that prices might crash. It's also the fact that this is harming home buyers. It's harming would-be consumers. It's harming workers. It's become so costly to buy a house now that that is detrimental to the economic outlook in and of itself. The thing that alarms me is the advance in prices by 20% in 1 year. It's something we've never really seen before. We might have seen it when we had hyperinflation in the late 1970s, early 1980s, but we haven't seen it for a good 40 years.
And unfortunately, Zillow's speculative actions have not led to more of this intense focus that's necessary on how to rethink housing as a human right, or to ban institutional investors in doing these investments in the very least, right? I mean, that would be the first step, but obviously it wouldn't be nearly enough to ensure that everyone in this country would have a roof over their heads, that everyone in this country would be provided that very basic human right. Still, housing is considered a commodity. Most of the focus has been on whether Zillow's proprietary method of evaluating home values is accurate enough. For instance, in light of the challenges Zillow faced with its home buying efforts, some people took to social media to call into question the accuracy of the Zestimate tool. Real estate analysts like Mike Delpreet argue that the home value estimates on Zillow are just meant to manipulate the market further. He says it's really a toy. It's meant to drive people's interest in property. And by the way, it's no surprise that Zillow used its Zestimate, which has a top secret methodology in determining home values, to make cash offers on homes on the market for its home flipping venture. So prior to its home flipping failures, Zillow's chief operating officer decided to spin the company's home value assessment as this wonderful metric that enhances transparency. Jeremy Waxman said this: presenting the Zestimate as a cash offer to qualify homes up front will save time, reduce friction, and provide greater transparency, getting us closer to our vision of helping customers transact with the click of a
Okay. That's insane. Maybe this was intended for institutional investors. Hey, just trust us. Just trust our our estimate, and just don't question it. Take our word for it and pay in cash. Yeah. You should do that. Who the fuck would do that? Who has that much money lying around that they're just going to take Zillow's word for it with their estimate? They're going to purchase the home with that money based on that estimate. Who? In this economy?
button.
Please.
But considering the company isn't upfront about its methodology, and now that its iBuying venture has failed, those claims are laughable to say the least. And look, some already knew that. An unsuccessful 2017 class action lawsuit against Zillow claimed that the company was misleading homebuyers by publishing figures that were below what sellers were seeking for their homes. The judge ultimately dismissed the case, noting that the tool's name itself indicates that Zestimates are merely an estimate of the market value of the property. But look, imagine a world where we didn't even have to think about a Zestimate. Imagine a world where we didn't have to worry about market manipulation under a system that seeks to maximize profit for private corporations. Imagine a world where we could all find ourselves in a safe, comfortable place to go home to without having to worry about banks foreclosing on us, without having to worry about a landlord breathing down our neck, without having to worry about rent being jacked up without us even expecting it. So I think when you look at the various, housing market issues, when you look at the problem of affordable housing, it always goes back to the fact that we see housing and homes in this country as a way to build wealth, as an investment, as opposed to a basic human right. Nando.
Wow. Well, a couple of things come to mind. First is, we're yelling all day about politics, and when you see these kind of figures of the institutional investors just gobbling up every single home in America, you just fall into a pit of despair about how we're just entering this kind of new feudal reality in which we just live for and work for these massive financial institutions. The other thing that came to mind, and it's something that's kind of related to my segment a little bit, is that the housing crisis is particularly acute often in liberal cities and liberal states. The housing crisis in LA, we've talked about it a million times. LA is a 100% controlled Democratic liberal city. California is controlled by Democrats. The Congress people are all Democrats. The senators are all Democrats. Everyone is a Democrat up and down the line.
It's almost as if decommodifying housing and addressing the affordability epidemic is not on the Democrats' priority list. Almost as if it's not part of the Democratic agenda, the Democratic Party's agenda, to address the inaffordability of most housing in their areas. Huh. You know what else isn't necessarily on the Democratic Party's agenda? It's not a main ticket item. Addressing climate change. Two of the most short and long-term issues that threaten existence. Two things that Democrats don't really care about too much.
Crisis here
but more than the Republicans, so we're just supposed to not bite the hand that feeds us, right?
Awful. And it has to do with my segment a little bit because there's been this debate amongst liberals and leftists in recent months about for lack of a better term, this popularism, or the Sean McElwee school of political science, in which he claims that these suburban affluent people are actually more progressive than working class voters. And while that may be true on a sort of survey, the sort of left theory of political change is that that voters ultimately vote in their rational self-interest. And when your politics, like it is dominated by asset homeowners in places like LA, they will vote to protect the asset values of their home, and they will not do anything to change that. So, which makes the housing crisis worse.
Also, both Democrats and Republicans, they put stock in their more politically influential constituents, and their interests tend to be valued and upheld more so than the interests of individual voters. And that's where Democrats are not any different than Republicans, where they do put their donors, their special interest groups, their lobbies that are keeping them in office at the forefront of their priority lists. And that rapport that exists between Democratic candidates and special interest groups, lobbies, and big donors is the reason why Democrats do not address these more life-threatening issues that are plaguing this country right now, with the affordability epidemic of our housing market, as well as increased instances of climate change catastrophes that could be otherwise addressed through, the Green New Deal.
And let me jump in on that. I think that's.
Well, the discourse that that kind of like the discourse that blows me away, it breaks my brain, is the YIMBYs on Twitter talking about how PHIMBYs, which stands for Public Housing in My Backyard, they're actually the NIMBYs because they oppose new affordable housing projects because of what the affordable housing paradigm represents, and how the affordable housing paradigm also does lead to gentrification, overall increased costs of living, and increased costs in rents that end up affecting far more people in a given area because of the existence of this new affordable housing unit. And what even is that affordable housing complex with affordable housing units? How many people are served? How many people are actually receiving that subsidy? 10% of the building? Sometimes it's 50% of the building, but that new building and the appreciation of that building, of the appreciation of the value of the land where that building now sits, will have a reverberating effect, and that will lead to the building's indirect proximity to that block to start to see their homes rise or their land rise, which will lead to higher property taxes. And then from that affordable housing complex that has increased the land valuation of lower income tenants, buildings where they live in, and therefore it is increasing their rents, they are now paying more in their own unit that has not had any changes made whatsoever, that has not gone through any kind of updates. There is no upgrades, all because of that affordable housing unit. Affordable housing unit. We need a map. We need a map.
an important point, and we find ourselves in a little bit of a conundrum, right? Because there are working class families who have sacrificed a lot to be able to like scrape up enough money for a down payment of their homes, or for their homes, and it is the only thing that's kind of like keeping them afloat, right? They'll take out equity lines of credit from their home as it increases in value. So I think it's important to give those people a voice as well, because I think that they get forgotten in this conversation as we start looking for solutions.
I mean,
we
they
have
really
to
do.
keep them in mind, because you know, if we ever do get to a place, I mean, it sounds like a fantasy, where we start
I mean, this is the reason why I don't want to just be a tenant advocate, but also think about how, I mean, private property is theft, right? Private property ownership is theft, but I don't believe that somebody who is going through the process of owning their own home should have to relinquish it to the institutional investors that are chomping at the bit to purchase that home once it moves to foreclosure. And I don't want that to happen either. I don't think that that is right either, because we know until there is a real shift, until we start to make major fundamental changes in this country and how we have private property rights and the ownership of private property, anyone who right now is in the process of buying a home, and if they do find themselves in financial hardship to the point where they start to miss payments, and they move to delinquency, then they move to default, then their home is not going to be given back to the public as a housing co-op. It's going to be purchased by fucking Blackstone. Which is why I'm in favor of CLTs to purchase those homes, keep them in the home, transfer the home to a CLT, get rid of the mortgage, pay down the mortgage, and then make a transition to, you know, a ground lease that's offered through a CLT. You got to keep your home. You don't get to keep as much equity, but guess what? You get to pass that down to your kids if you want. Perfect.
treating housing as a human right as opposed to an investment. You know, you want to make sure that people like who are still like close to the bottom of the socioeconomic ladder aren't like punished further because of what we're seeing from these institutional investors. I don't know what that solution would be exactly. I mean, I think it's important to have that conversation.
No, yeah, I mean, it's the kind of thing where, like, if you were to design a society from scratch, owning your home is probably warps the politics of a society, you know, especially when you get into like inheritance and things like that. Like it, you know, it just familial wealth grows and it kind of shuts out people in the rest of the society. And you know, if you were to design a perfect, you know, kind of society from the ground up, I don't think that you would design it in a way in which people own their homes. Like you would do some sort of public, you know,
CLT. Because with the CLT, the parameters of that given CLT, that is a co-op that is owned by everyone. That is if you are a member of that CLT, that house that you live in, as well as the rest of the space, I mean, privacy rights and everything, you can't just like, there's still, you know, rights you have to abide by, but open space and that house that you live in, that's yours and everyone else's. A better housing model that is built on the foundation of publicly owned spaces that give people the opportunity to not only be in favor of a decommodified housing option that they can then have security, which would be very nice. It is democratically operated as well. Gonna have to fight the cult of home ownership, if anything. Yeah. I think that getting a CLT, getting a nationalized CLT model off of the ground would have to start with those who right now are on the brink of foreclosure. It wouldn't be the people who are doing well. It's the people who are about to lose their home altogether. They're the ones who should be targeted. They're the ones who need the protection right now. They're the ones who probably will opt into a CLT or be in favor of a CLT, other than the alternative in their case, which is to lose their home, default, go file for bankruptcy, and then be fucked for the rest of their lives and rent for the rest of their lives.
Public arrangement in which, you know, not dissimilar to like what we see in Vienna and places like that, where you get high quality homes, like a high quality place to live that's beautiful and comfortable and, you know, well maintained and things like that, but that you don't, that it's owned publicly, it's owned, you know, collectively, not by, you know, either an institutional investor or an individual or an institutional finance.
We should tell them about CLTs.
And private interest. That being said, the United States decided to go a different route from a lot of countries and made homeowning the bedrock of the middle class in the middle of the 20th century with the GI Bill.
Yeah, I said BLT.
And you know, that has had probably a long-term poisonous effect on our politics. I mean, you did that great segment months ago on Prop 78 or whatever. It was like
Prop 13, which passed in 1978. Yeah.
Prop 13. That is a direct outcome of building a society about 30 years before, or 20 years before, in California, which was the
Prop 13, I believe, has capped property taxes.
You know, California dreaming, baby. You know, like everyone moving out west. There's like cheap land, there's cheap homes, and it's beautiful.
Did they say that?
Sunny enclave. And then 20 years later, you get this like unbelievably reactionary prop in California that has warped its politics since then. You know, and so that's true as well. You know, it's like people were like own their homes and like what they want to do is like not pay taxes on them and protect the values on them. You know, like once you have it, you become, you know, you can become very tied to it, like as you said, because it is their source of well-being, their wealth, it's everything. You know, so you protect it like with your life almost. And you know, and I'm seeing it here in Venice with this Mike Bonin recall campaign all the time. I mean, it's just homeowners freaking out about the about the fact that Venice is one of the few neighborhoods in America that is down in terms of home prices. So yeah, it definitely warps your politics, and there's you know, it's like everybody, but like as a class, that's definitely an effect, and you know, how you deal with it is just very difficult given our system.
Prop 13 caps property taxes at 1% of assessed value. Oh, shit. Okay. Low as fuck? Yeah, I guess if you think about, you know, a little bit of the trade-off is the cost of the value of a home in California is so fucking outrageous